Hello, everyone. Good evening, and welcome to another weekly market watch. Actually, I prefer to call it as more like a trading plan for the week. How is everyone doing today, guys? How are you doing? Boys, girls, ladies, gentlemen, everyone, how are you doing? Where are you watching us from? Write down some countries. Get me excited. Again, Finland. There we are. Okay, Romania. And we start here. UK, Turkey, UK again. So, two people from UK so far. Spain, Poland. I will lose the count in just 5 seconds. Shout out from Serbia. Yeah, from Spain. Two people from Spain. Or maybe it's the same person and posted twice. No, I'm joking. From Ireland. Okay. Again from Ireland. I hope you are not the same person. No. Albania, Denmark, Uganda, UK. Here are three people from UK. Hungary, from Paraguay, UK. Okay, UK took over tonight. Slovakia. Guys, I'm really excited to myself and the whole Elevating Forex team to have you on this webinar for one more time, of course, because you find value out of these webinars, and that's what excites me the most. So let's get started. For those who are still joining us, guys, of course, take your time. And for those who are first time here, maybe we need to run the disclaimer. And of course, for everyone else, this content is used for general information and it's not intended to provide any personal advice or recommendations. All right. And if you don't know who am I, my name is Theo. My surname is Theodorou. That's originally all the way from Greek Cypriot. In the world of trading, I'm a certified financial technical analyst by the Society of Technical Analysts in the UK, by the CFT, and also I'm a certified market technician by the International Federation of Technical Analysts. I have more than 10 years experience in trading and I specialized in currencies. So when it comes to currency correlation, it's that what I love the most. On a daily basis, I deliver market analysis for hedge fund trading firms and all this stuff, except my trading itself. And I create also educational courses for trading. And now I'm preparing something cool for investing, and especially in cryptocurrencies, but purely for investing there. And I publish many articles, and I host in magazines, and I host events with Steve Ninson, with John Bollinger, and many exceptional and famous people in the industry. Damien said, I do not have audio. Anyone knows how to solve this? Guys, if you know how to help Damien with the audio, please just suggest something. Thank you very much. And let's get, guys, do you see my screen? Euro US dollar 4-hour chart. You can press yes on the chat. You can send a yes just to make sure that I will not talk to myself again this time. And after a few minutes, somebody will say, Theo, we don't see anything. Yeah. All righty. So, guys, as you know, or if you don't know, last Friday, the non-farm payrolls in the US, they favorable the US dollar. Therefore, the market appreciated the US dollar. So what happened is that on Friday, we saw all the move of the week pretty much. Okay, so the price created a massive bearish engulfing, especially the Euro US dollar sold off on about 50 pips on Friday, and then it continued throughout the New York trading session. And we are arriving at the weekly support that we marked on the previous webinar. So from the previous webinar, if you remember, we had to capitalize from this resistance to this support. And it just came throughout this event. Enough with the lines. Surojit asked, do we have a setup for gold this week? Will be volatile Wednesday onwards? Absolutely, yes. We're going to see the gold. And actually, it's one of the good markets, in my opinion, for next week. Anybody, anyone else? Anyone else has any questions about or anything to ask about any currency pair or commodity indices? Just write it down right at the beginning, please, of the webinar, not when we are about to finish. So I will have the time to address your questions. Perfect. Adam asked about NASDAQ. Yes. Kayan, what do you think about Bitcoin? We'll go on Bitcoin. Paul, yes, please, gold opinion today. Perfect. So, guys, because we are a lot of people on this webinar and everyone wants to know something, just be patient. I cannot talk about 10 different charts simultaneously. So, I will go through the majors and then we're going to go through the rest. Okay. I hope that it's cool. Oh, that's a great question. Please teach us some strategy, guys. Simple as it can be. The most effective and simplest strategy, it's the one that you look on 2 time frames. You go on the weekly chart to look simple for direction and if any price action reversal there, and then you go on the 4-hour time frame to just execute the trade and you're done. If you are new to trading or if you're struggling to trading, the best way to help you start or reset is through this way. Trust me, I trade for 12 years now, and that's the bread and butter strategy that everyone I suggest to use and recommend, of course. Okay, so like we do on this webinar, you can follow the same strategy. We go on the weekly chart and we see what's going on the weekly chart. And I zoom in and I want to see what happens on these 3 to 4 bars. So last week we consider from the previous Monday to today, we consider it as the previous week. I don't want to say as the current week because the trading week is over and we're going to move on into the next one. So during the last week, the price created this nice bearish, very well-deformed candle with the upper week rejection up here. So from this week onwards, we do expect the price to continue moving lower. So the question now, after we make our selection, then we need to time the market. So how do we enter the market? And that's where you go on the 4-hour time frame. If you don't want to use any time frame lower, you just simply stick to the 4-hour time frame, and you are looking for the market behavior that has this sequence: lower highs and lower lows. So far, the market is moving lower, right? We know that there is a support here as we marked it. So we're going to wait for the price to move upwards. Hopefully, this is going to happen. The price is going to move upwards. For some more advanced traders, if you know about some smart money concept, then we have here the fair value price at this region. You can have it on your chart. For the rest, it's totally, it doesn't need to be that significant. Wait for the price to move upwards. It's going to arrive somewhere here or perhaps somewhere there at these areas that I have on the charts. And you can wait for a price action reversal, like a bearish engulfing candle, a bearish engulfing. Let me find very quickly a bearish engulfing like this one here. Look on the left here. This one here, it's a bearish engulfing candle. Or you can find a candle that has this upper wick, this one here, small body compared to the wick, and that's your 2 entries for the strategy. Okay, I can teach you in much more detail, but just a simple piece at a time because we have only 45-50 minutes, maximum 1 hour to stretch out on this webinar. Okay, and I have to cover a lot of currency pairs, so you are very well equipped for the rest of the week. Okay, guys. So we are very bearish, in my opinion, in all majors. So, but on this one here, the price, it's already on the go. So we need to wait for a kind of retracement. Okay, we cannot just go, or if you're going to enter right here on Monday, where are you going to place your stop loss? You want to place the stop loss in an area where there is a high probability that the market, it has a starting point. And in this area, the starting point, it's up here. So I'm not going to enter here with a stop loss up there like it's 200 pips, 250 pips stop loss. That's it's going to take me ages. I did it in the past, and it took me ages to get into 2-to-1 reward to reach, so it's not worth it. Next one, guys, the Great British Pound against the US dollar. Here on the weekly chart, again, how do we trade it? We go on the weekly, we try to see what's going on with price action and market bias. The market is ranging clearly here. So on the weekly chart, again, because of the strength of the US dollar, it forces this pair, the pound USD, to move lower. Okay, so if we just sit with this information, guys, sorry, I will interrupt. Demian asked, anyone who doesn't have sound via Zoom up, can you please type and let Demian know? I like that everybody support each other on these webinars, because we are one big team here and we are all working for the same goal and purpose. We all want to make money out of the markets, right? So on the 4-hour time frame, here is again similar behavior like the euro, guys. The price broke out of an symmetrical triangle on the 4-hour time frame, and it hits lower. So we expected that the price will reach this area of support here or this area of support down there. Now, what happens during significant news events is that the market just takes off so fast that if we don't just enter on spot on lower time frames and try just to scalp for some kind of distance, then it becomes hard, and we have to wait a little bit of time before we enter again. Some traders might want to wait for the price to reach this area here, find some reversal price action like this, bullish engulfings, all the way bullish engulfing, and just go long and until some kind of areas of resistance, which it's up here. Do you guys understand this? Is that clear to everyone? Do you have any questions? I will move with the next one on the list, and it's the USD JPY. So weekly chart again. The market, it's in a clear uptrend, and to be honest, it's the only currency pair out of the majors that the higher time frame, the weekly chart, has clarity. All the other markets we examined so far, the weekly charts are messy. We just see the price action of the previous week and we try to estimate what direction we want to trade. But on this one here, the market makes higher highs and higher lows. Do you guys see that? Price makes higher highs and higher lows. So it's easier on the lower time frame on the 4-hour chart to look for some bullish price action. So on the 4-hour time frame, the price was doing its thing, but now it has clarity because it broke above the support and it stayed above the support, to be honest. So from Monday onwards, I will be looking to trade it all the way to this resistance. But because I will be sleeping during the Asian trading session, maybe the market will move a little bit lower, and you can add this area on your chart, guys. We have a very well-defined order block here and that's a bullish order block. What does it mean? Simply means that the market started this bullish move from this point here, and if the price will drop, because we are still in this uptrend, we expected that it's going to touch into this area, it's going to find support, it's going to bounce off, and it's going to move upward. So I'm pretty bullish. So I'm looking for long positions on the USD JPY on the 4-hour time frame, unless something changes and we have to change our thoughts. I mean, if the price will drop under this low here, then definitely we are going for a downtrend, right? But considering that the price remains above this area of support, we will be looking for long positions. Okay, guys. More questions. Let me read something from here. Surojit said, I got some buy positions between 2300 and 2320. My heart is in my mouth now. Already lost a good amount last week. Okay, we will have a look at the gold, but look, the non-farm payrolls, they show some kind of strength on the US dollar, so we have to consider that. Okay, I cannot tell you that, hey, close or keep your positions, because I'm not entitled based on my occupation and my position, but I have to tell you the facts, and then you decide if you want to keep or close the positions. Okay. So let's continue with the Australian dollar. Gibbs asked about the gold. We will check the gold after we finish with the majors. Okay. So Australian dollar, US dollar. Does anybody traded last week or is keen to trade this week Aussie USD? What do you think, guys, about this one? So the Australian dollar, US dollar, as well as the New Zealand US dollar, we will see it in a while. They both very weak currencies right now. And what I love here is that there is a bearish engulfing with a bearish close on the Australian dollar, US dollar on the weekly chart. Why is this very promising? Because it changes the market structure of the 4-hour time frame, guys. So on the 4-hour time frame, we have this low here and this highs there, and the market finally broke outside of this one. Okay, now I will tell you most of the times what the market usually does after it breaks a significant level of support. Usually it misleads the traders. Why? Because this price at some point will retrace back a part of its move, either 50% or 61.8%. So if it's going to retrace this much, we can use the Fibonacci to be more accurate. And we see this retracement lays somewhere around here. Do you guys see that? It's that big area. So if the price enters here, it means it moves above the support. So do you think that the price is back to the range and we are in the ranging market, and after we see the price reaching right here, we're going to keep buying until it reaches the this high point? What do you think? So until you think, I'm going to give you the answer. Oh, Theo, you're killing us now. No, I'm joking, always. So if the price will retrace and it will come up to here and stop, then we will consider this as the continuation of the downtrend, and we will keep looking to go short. Okay. But again, we have to have a little bit cautious approach, because the price it will eventually come back to this range. So maybe it's going to get hooked by the range and it's going to attract buyers to push the price all the way here. But most likely, if we're going to see the price stop around the 0.66 30 and 40, it's around 10 pips different between them, we are good to start looking for short. Oh, my bad. Surojit asked, what do you mean by going short? I mean to sell the market. Short means sell and long means buy. Or bearish and bullish, they have the same implementation. So when we refer to a bullishness, a bullish market, bullish price action, long, we are talking about primarily buying. When we mention the word bearish or short, it's primarily for sales. Okay, guys, because I do not know the level of experience and the level of trading knowledge and trading understanding of each person on this webinar, please, any question, it's more than welcome. Okay, so Kayan asks, do you suggest short for Aussie under the conditions we just mentioned? Under these conditions, tomorrow, because I will be awake during the European trading session, I'll have to see what the Asian session will do, but primarily I will definitely look for short positions on the Aussie. Okay, unless some reversal price actions occur and the market will start the retracement. And if the retracement occurs on the 4-hour time frame, it means that on a 30 minutes, on a 15-minute time frame, it might gonna take 2 days of uptrends until we find the sweet spot to go short, to sell on the 4-hour. Do you guys understand this? There is a little bit of misunderstanding by traders when we say we are looking, let's say for this, we are looking to sell the market. We don't mean right now. We want the market to be at a level that we can have high probabilities of success by doing the same thing over and over and over. Okay, now if the price put a reversal price action like this one here around this support and you decide that you want to buy it, again, it might gonna move upwards, but it's a low probability trade, without meaning that it cannot be a winning trade. Okay, guys, so many questions here. I would love to answer everything. So let me start reading. What is that other USD pairs gonna do? By a question by SFX. I will answer it right now after the Aussie. Ram asks how to spot perfect order block. You're gonna spot perfect order block, guys, in 2 ways. If you are into this, or if you are into the smart money concept, the first thing, actually, I've done a webinar for a prop firm, and I talk about order blocks there. The first, you want the order block to break a major or any market structure. You want the order block to consider something as an order block. You want it to create a new market structure like this one here. We have the support, and this move here broke the support. We trace backwards the order, we trace backwards the move, and where the move started, we want to see the kind of information. If the information, which usually is the case, it's a bearish engulfing candle like this one here, and on my analysis, I address it all the time as a bearish engulfing order blocks, it means that it's a significant order block, okay? And that's gonna validate the order block the most. On the other, like this one here, look a little bit on the left. This one here, guys. Here it's a bearish engulfing order block, but the market didn't break any structure. It came up to here. Okay, so this one here is not as significant as we want it to be. And once the price retested right there, okay, it retested here, but we couldn't consider this one because it didn't validate as an order block yet. So this is the order block again. The price reached this level here and it bounced off, it moved upward, and with this within this bearish engulfing order block, these candles here appear and the market sold off, but it didn't continue. So after the bearish engulfing didn't follow through, we should have expressed this as a failure. So I wouldn't pay a lot of attention to this order block, but I wouldn't have paid a lot of attention at the beginning because it didn't create a market structure. Okay, that's the key point. And I'm looking primarily for bearish engulfing and bullish engulfing candlesticks to form the order blocks. Okay, that's the only thing I'm looking for. What do you think about Australian dollar, Canadian dollar? That it's gonna melt like the ice. That's what I think. Okay, you ask me what do I think personally, so that's what I'm answering. But technically, it looks for shorts quite well. Adam asks, do you think it is important to know about Elliott wave theory to be a successful trader, or is the strategy with resistance and support level with some indicators such as EMA is enough? It's absolutely enough, guys. With the Elliott wave theory, there are people, they are still trying to figure out which it, with all the respect to all the either it's Elliott wave, either it's oh my god, it's a Wyckoff, everything. I have respect to everything. Actually, I use Wyckoff more than Elliott wave. I'm qualified to teach you Elliott waves, but trust me, I don't use it because all the time there is this battle. If this is the wave 5 and if this is the wave 4 and we have another sub-wave, so it's an endless strategy. So at the end, I get upset and I just say, where on earth we have to enter now? Okay, we understand, but where is the trigger? How do I participate in the trade? So I prefer to use more support, resistance, market structure, and a handful of candlesticks. Now, if we're going to apply some indicators and all this stuff to validate some entry points, totally fine. Okay, but that's the short and very I think very realistic answer on Elliott waves. I have a good friend of mine, he does good things with Elliott waves, okay, but when it's the time to timing the market and trade on lower time frame, things get very messed up. Okay, Surajit, it might give a buy from where it is right now if it bounces from the support below. Yes, it might. Adam Jada asks, when it goes down, is that long? And when it goes up, is that short? It's the opposite. When it goes down, it's short. When it goes up, is long. Think of short and long like an up and down. Like when it goes up, it's like you extend something, so it becomes longer. And when it goes down, let's say something becomes shorter. Kiam, what about 5-minute chart? Yes, on 5-minute chart, you can still, when you go to the 5-minute chart and you see the waves that they are upwards, yes, you can trade the uptrend of the 5-minute chart. Guys, there are some very important things. If you understand these fundamentals of trading, you're going to have enormous success in trading. Trust me. You're going to, okay, everybody, please pay attention to this. Forget the market for a second, and I will give you a tip that it's going to totally transform your trading. Okay, now, when you decide a time frame to trade, you trade the trend on that time frame. I repeat that. If you decide that you want to trade the 4-hour time frame, you're going to trade the trends on the 4-hour time frame. If you decide that you trade the 30-minute time frame, you're going to trade the trends of the 30-minute time frame. If you combine the 30-minute time frame with the 4-hour time frame, with the weekly time frame, with the 15-minute time frame, with 5-minute time frame, and you try to understand this market goes up, this time frame goes up, but the other goes down, then this one goes up. Oh my God, what am I doing? It's like I don't understand what's going on. Guys, this is a trap. Every time frame is generated by another time frame. Even the 1 minute chart is generated by the 1 second and 2 seconds and 5 seconds charts. Okay, so the bottom line here is that once you figure out your lifestyle, your daily lifestyle, and once you figure out the times you have in your disposal to sit in front of the screen for trading, then you're going to figure out the currency pair, what moves better at that time, and then you're going to figure out which time frame you're going to use to enter the market. And that time frame you're going to choose, that's the time frame you're going to use its trends, and you trade the trends. At some point, we all get losing trades. At some point, we get stopped out. At some point, our stop loss get triggered. We can go back to the market and give 1 million reasons why we shouldn't have taken that trade. Guys, this is the biggest trap you can get yourself into in trading. So just stick to a time frame. And the reason I encourage everyone that they want to trade, they want to take their trading a little bit seriously, either with me or with anybody else. You can book some time. Doesn't need to be with me. If you don't like my face, if you don't like what I show here, just find somebody else to help you arrange a little bit the trading around your lifestyle, so you have some clarity and you know what are you looking every single time you are going to trade. Okay, that's my biggest advice, purely from my heart, with no intention to get you on anything beside what the purpose of the webinar is. Okay. Ram asks, should we take entry on the order block or fair value gap? Good question. That depends if that fair value gap or order block has some kind of reversal price action there. Okay, then you are fine. SFX, in my strategy, order block also has to take liquid to be valid. Okay, that's perfect. That's a good thing. Joseph, oh, soy español. No español. Sorry. Benan said, please, can you do a recap? Recap on what? So, guys, I'm sure that everything is valuable, but let's keep moving. Okay. USD Canadian dollar, the price broke up. I will take it a little bit fast because I want to cover a lot of currency pairs, but I'm sure that was valuable what we explained so far, because it gives clarity to everyone that's on this webinar. Now, the price broke above this resistance, and we want to see some kind of retracement back to this resistance, and we're going to try to go long with the USD CAD. So my biases, it's long on this one. USD Swissy, we use this one here. So USD Swissy, I will use this example that I do analysis, some detailed analysis on this one. On the 4-hour chart, we have this double bottom and we have this neckline, and officially the market now it's in this uptrend, not uptrend yet, but it has an upwards momentum. By the last week, we used to trade only based on this downtrend, and there were few opportunities that they arose at this time. But now, after this double bottom, non-farm payrolls push this one to the upside, and yeah, it's very prominent. I'm looking to go long on this one, and until we see what's going to happen within this bearish engulfing order block. Also, if the price declines and enter into this 4-hour bullish engulfing order block, it's going to be a good way to look also for long opportunities to buy the market. Okay, bullish, long, buy, bearish, short, sell. Next one, New Zealand US dollar. Look at this weekly chart, guys. Weekly chart. This rejection here, all these areas of resistance here. Look at this. All these areas of resistance here, they've been rejected on Friday with a nice, very bearish candle with a long upper wick. So from next week, we do expect the price to drop a little bit further. Okay, on the 4-hour time frame, we still have to clear this support. So at the beginning, I said that was very clear. That was my mistake. We still have to clear this support because at this support here, maybe the price finds some bullish engulfing or some hammers like this one here, and it move upwards. So we don't know what's going to happen. Therefore, we have to see the price action here because it's a counter trend trade. It's not trade with a trend to just place buy orders and just leave it. This is going to happen afterwards. Let's check the gold. Finally, what's going on with the gold? So last week, the gold, let me see, is it the same? Yep, it's the same in both analyses. So gold, last week, we said that the price was at this resistance here. Yep. Come on. This resistance here. Bearish engulfing didn't follow through last week, and we said that maybe we're going to see some move to the upside. We didn't see that, of course, and the price declined. But the overall trend on the gold, it's uptrend. However, this swing low here now is very prominent if the price will break it. So if we go down on the 4-hour time frame, we need to zoom out quite a lot to find the information here. Here it's the support on the gold. Forget this for now. So here is the support on the gold. If the price comes here and finds support and bounces off, it can take over and cover some distance, at least these fair value gaps, and hopefully makes a favor to my friend Surojit that holds the trades. Yeah, maybe you can see something good out of this trade, and the price might move up, might moves upwards. Okay, but again, based on the weekly chart, we focus on this market move. We cannot focus on what happened here, guys, and trade there. I mean, this happened 1 month ago, maybe more. So we want to focus on what happened the last few weeks because we are not investing into this market. We are just trading with leverage. Okay, what I see here, yes, it's a bit of a mess, of course, but at least we have some clarity that the sellers are in control now. Sell orders are significant. They overcome the buy orders, and the market is more likely to be continued. Now, I'm not here to prove right or wrong. I analyze what I see and I trade what I see. After a few days, maybe the price will stop here, find some solid price action and bounce off and move upwards. We don't know what's going to happen there. Okay, but I'm preparing you for both scenarios. So a support around here and a push to the upside maybe can lead this market higher. Okay, but otherwise we will see some continuation. Okay, let's check the Nasdaq. Actually, it's one of the markets that I trade pretty much every day, Nasdaq. We reach another all-time high here. Let's clean the chart. So all-time high here, resistance, and our support is down there. So on the 4-hour time frame, we have this new information that the market made this higher high. Now, is it gonna come downwards. We don't know. This resistance here, it's an all-time resistance. A move above this, it's going to be a new all-time resistance. It's not an old resistance to use it as reference and to say for sure, you know, the market now it's going to attract sellers and it's going to decline. It's in an uptrend. That's not a negotiable thing. Indices, when they are in an uptrend or in a downtrend, they are really in an uptrend or in a downtrend. They don't have that sometimes falsely swings. So I believe that if the price will drop a little bit and come to this area, it's going to be good to buy. But if you believe that it's going to drop and you start selling from here, yeah, it's totally up to you. Depends how you feel more comfortable. Next one, let's check a little bit of these guys here. One of the good currency pairs that I will be definitely focusing on, it's going to be, I want to see how the Euro New Zealand will perform and the Pound New Zealand will perform. Why? Because Kiwi is very weak. And if we go on the weekly chart, look at this here, guys. Last week, remember, we marked this low as our support. Do you remember that? Sorry, I just need to take a sip of water. Actually, it was more than one sip, but thanks for your patience. So, guys, everyone, just to clarify, when I use the word guys or everyone, I mean just for everyone, okay? So just to make sure, I just thought about it now. So the price found support at the support we marked on the previous Sundays, okay? And it didn't went through for the close. It bounced off and see that it moved upward. It broke this downward trend line that hosted lower highs and lower lows. The neckline is here. It created a higher high. Now, this is what we call reversal trading, and it's one of the very high probability trades. Price makes this high here. We wait for the price to come a little bit around these areas here, and we look for the price action reversal. Price action reversals always occur. Look at this bullish engulfing, or this hammer here, another bullish engulfing there. Wait for the price action reversal and we can go long. It means we can buy around this level, okay? What I like to do is to match the levels with some kind of Fibonacci numbers just to add some validity on the concept. So either you use this swing low or that swing low. It's pretty much the same. The area, it's pretty much the same area. And we're going to look for longs. It means to buy around these levels here. So please add it on your watch list. And I believe it's going to be one of the good ones this week. Next one, Euro Aussie. I'm not very keen on this one. That's why I didn't mark it. But Pound Australian dollar, there are two good areas to look for longs. Why? First, the selection. The selection came from the weekly chart. So we have two things, guys, every time we trade. We have the selection, and that's, you're going to find it on the weekly chart. Now, if you need some more how to trade, let's say 30-minute chart like I trade and the rest, that's going to be a different story. But for everyone and to be valid for this webinar, the selection we do here, it's on the weekly chart, and then the execution, it's on the 4-hour chart. You can go down to the 1-hour chart, but I prefer to stick with the 4-hour chart. So selection comes on the weekly. We see both moving averages, they are pointing upwards, it means uptrend, and we see a bullish engulfing price action, which means that the market is on a rally. If we go down, so we want to trade this market because we identify that we want to be a buyer. We go down to the 4-hour time frame and we see the market structure. We say we want to be a buyer, so we want to see the price to make higher highs and higher lows. Where we buy, better to buy on the swings. we buy the retracement rather than the breakout of here. Okay, if you want to buy the breakout, you can buy the breakout, but I usually buy the retracements. There are two areas for the retracements. The first area, it's this one here, that was the previous and broken resistance. And the next area, it's the order block created here, because it's not a bullish engulfing order block. It's not a, I prefer to have a bullish engulfing order block, but again, it's very close for a bullish engulfing order block, so I will just keep it on the chart. If the price declines and comes somewhere here, anywhere in this region, it's going to print the reversal price action, and I will take it and ride the trend to go long. Pretty much that's it. Simple. Pound Canadian dollar, I'm not very interested in this one because it's not that, it doesn't have that clarity. But Pound New Zealand, come on, the same with the Euro New Zealand. This one here, bullish engulfing, very, very promising on the 4-hour time frame. I think price is sitting right at this resistance. So, yep, we have to wait for the price to move away from this resistance. So, what I believe it's going to happen, the market will sell off. I don't know if it's going to stop somewhere here. I prefer to see a deep retracement up there, but maybe it's going to stop up to here. So if anyone will get very excited and will start shorting the Great British Pound New Zealand, remember that don't be very greedy, because the market trend now changed, and most likely we are in the development of the uptrend, and secure some profits at least somewhere here. Okay. Yusef said, live account for 2 weeks and my winnings are equal to my losses. In your experience, am I going to be profitable also? How do you strengthen the weakness in my trades? What do you think of range trading? Thank you for all your help and enlightening. Thank you so much. So if you have 50% winnings and 50% losing trades, then you start aiming for 2-to-1, and you're going to overcome that really soon. The second one, in my experience, everybody is going to be a profitable trader as long as they are willing to take they are willing to take through the learning process and to keep doing things in action. Okay, so that's what I believe. How about Dow Jones? Yeah, we don't usually do the Dow Jones, but I will do it. I saw a question on the YouTube channel. Can you show us how to define a fair value price gap? Yeah, definitely. That's very simple. How to define a fair value price gap, guys? Simply, you need 3 candles, okay, and you need 3 candles. Just to make it very, very simple, you need 3 candles. The one to be in an uptrend, the one to be higher than the other one. So they make higher highs and higher lows. And you're going to take the third and the first candle, and you're going to find the low of the third and the high of the first, and the area in between, it's the fair value price, the gap. That's why it calls as a gap, because it's like the market expected to all the time to go like this, but sometimes it goes like that, and then it comes to fill up the gap. It's not an actual gap, it's a theoretical gap. So another few currency pairs for today: the Australian dollar, Canadian dollar. Somebody asked me what's my opinion on that one. If you see the weekly chart, guys, and let's say we are 100 people here, we are actually about to take a trade, and we are given only the Australian dollar, Canadian dollar, and we are given to do the analysis, the selection on the weekly chart, and to go and execute on the 4-hour chart. And we see, all of us, we see this setup, we see this pattern here. What do you think you will be happy to trade, to go long and buy, knowing this, or to go short and sell? What do you think will be more appropriate, or what do you think it will have been a higher probability on this one here? Come on, let's do this one, a few more and we are done. That's important. Someone said short the trade. Yep, I agree with that. I will definitely go short. I will definitely sell. Yes, sell. Other people, they put sell. Perfect. So we sell here because the price, it rejected the resistance. It's inside of the inside, it rejected, and it's a very nice dragon. It's a dragonfly. I think it's, we call it, no, dragonfly, it's gravestone doji candle. Okay, so yes, bearish because of the wicks. Perfect. Yeah, so on the 4-hour time frame, we know that we will, guys, if you realize, I'm giving you here a practical way to practice this strategy. Okay, so I'm happy that some people already got it. For those who are new here and they don't understand it, please try to understand. On every currency pair, I try to give you I try to make them to replicate the same strategy all over again. Okay, so what ideally we want to see happen next week is the price to move a little bit away from all the support, and then to see retracement back, and we're going to find some good entries to short this one and go short and to start this downtrend. That's what I want to see here. And New Zealand Canadian dollar also on the weekly chart. It's been a while, this market, it's just go up and up and up and up. It rejected with this wick here. Let's see, I'm not very keen, to be honest, to go short on this one if the Australian dollar will give the opportunity to go short against the Canadian dollar. But just in case, we have this on our watch list. On the 4-hour or 1-hour chart, again, we want to see some kind of push to the upside before we again go long, go short. Sorry. Ricardo said, I don't know if you answered me before. I was, but I would like to ask you, how do you find the zones of resistance and support? No, I definitely didn't answer that question before. I find the zones of resistance and support by looking on the higher time frame. I primarily look on the weekly chart, and if the current price is here, let me delete everything. So if the current price is here, I want to look a little bit on the left and see where there is some kind of equal highs. And then I will draw the line and I will call it as resistance if the line is above the current price. But for the downside, because this is a weekly chart and we're going to take trades on the 4-hour, 1-hour, 30-minute time frames, I will mark the previous week's low as the support. And then the previous week's low as the other support. Okay, that's just to be able to map the market. When then we go down to the 4-hour chart on the lower time frames, and we see that there are other support that they are very visible, like this one here. This support is not shown, let's say, on the 4-hour time frame, but it's very clear because it has more than 2 weeks that they are pointing downwards on this 4-hour chart. So we will mark it and we will pay attention to that. Guys, you have, trust me, you have so many things to learn from me from these webinars. And really, lately, we just stretched the webinars for an hour, which is supposed to be only for 45 minutes, because I don't want you to get tired and I want you to enjoy the webinars. But I see that you engagement, and that's what makes me excited and happy. So your engagement, it's what tells me that I have to give you more and more and more. And I try to help everybody here. Depends on your, regardless on your trading understanding and trading level. Okay, so I hope we fulfilled all the inquiries for today. I hope you guys enjoy it. You have, is it just about the week? Yes, it's about the weeks. It's exclusively about the weeks, guys. Exclusively about the weeks, and I will address it on the other webinar. Okay, and I will tell you exactly why the wicks and not the candles and not the bodies. It's purely the wicks. It's a different thing to talk about support and resistance. It's a different thing to talk about supply and demand. People, they are very, very unqualified, and they go out and they bombard the YouTube and other channels with bunch of information that they don't even know, most of them, what are they talking about. Okay, so I will give you clarity on supply, demand, support, resistance, all this stuff next week on the other webinar. Okay, so guys, sorry, I have to wrap up for today. Again, if you need any other questions, just send them on George at support on our Telegram channel, and George will send them over to me and I will address everything. Okay, I would like to wish you to have a fantastic evening, everyone. Thank you so much for tuning in tonight. We really appreciate you. We are excited for the upcoming week's trading opportunities. Myself and the whole Elevating Forex team would like to say a very big thank you. Have a great night, everyone, and I look forward to see you again next Sunday at the same time. Thank you. Bye-bye.